Okay, Saturday, February 19th, 2022. I'm going to take a little historical look here at the S&P major markets here. I'm looking at it on a weekly, and we're basically looking at 25 years worth of information here. And I've broken it down in just a few points, significant areas to pay attention to kind of understand how this thing works. Going all the way back to 1996, where we're at this pink level here, we had revisited that for the Great Recession. So right in this area here, in spring of 2009, after that was around the time after Obama was elected. It was dropping already at the end of Bush's term. Gas prices were $5, just like they are right now. That fall, and it tanked all the way up until about the election, dropped a little bit more, then started to take off after Obama got in, is what happened with the market there. And it touched a 13-year low, which brought it back to the middle of Clinton's regime, if you will. So, zooming in here a little bit, we're on the weekly. We had this drop here, which started it started back up here, but right here was 9/11. And 9/11 caused a little bit of a dip. People got over it for a minute and then realized it was a little bit more significant and dropped it back down to here. So this represents from the day that 9/11 hit down to that bottom about a 30% drop in the S&P. That's pretty significant. Then we recovered from that and went all the way up here, and everybody had multiple houses. Well, I say everybody, but a lot of people were getting into real estate and all this kind of thing, and got overextended, and then we started a recession here and didn't realize it until further down, and then everybody's underwater and it just collapsed. You had all this financial collapse here happen. And we bottomed out in the spring of 2009. Then we had kind of what happens on these hard drops. It's just like a ball falling off a building, and has a little bit of a high bounce, and then kind of rolls over, and then it gets on. It was on a little bit steeper trajectory here. Then it started this new trajectory angle here on August 1st of 2011, and it's basically in a channel and hitting the top of this thing multiple times on the top of this teal line here. And we didn't cross that line, and here we had a dump here for COVID. So this is the COVID dump, 35% drop on the S&P, and it didn't last very long. We had this major drop, and then it just reversed and went straight back up, and all the way back up at the end of August here is when it cracked through this trajectory line that started back in August of 2011. It cracked it, pulled back a little bit, and then rocketed off. So we basically have had what I'm calling here a blow off top on the S&P, and now it's rolled over. So all of this area here is a COVID pump, and I've been baffled. It just makes zero sense as to why, it just doesn't make common sense. I understand why, but this is what happens, and they pumped all this money into the market to cause this, and it's not sustainable, so it's rolling over. So far we've dropped a max of 12.33% as I zoom in here, and probably should go to the daily at this point. And we pumped up to this highest level here, and since then we've dropped 12.33%. We've popped up a little bit here and rolled back over again. And what happened was we created this pennant here, potentially, is what I'm seeing. And it even cracked through it. I had kind of a fake out breakout here. But the main line of the top pennant is this yellow line here, and then you got this bottom one here. It broke through it just the other day. And the measured move of that gets us down another 9.67% drop, down to around 39.30 is what it looks like, maybe 39.50, somewhere in that ballpark. And that's where this other teal line is here, turquoise line that crosses. And I said a couple of months ago in a video that it would be interesting to see snap that line based off of another measurement somewhere. And I thought it was going to be springtime when it could cross, and it makes sense for it to cross a couple of major lines is where it wants to exit through. So that could be happening in April, May, somewhere in there. Is it could take that long for it to drop this additional 9%. It might just kind of be on a slow drop down. And to get it back underneath this main teal line here, which is the main trajectory since August of 2011. And I have to go way back there to show this angle of this line. So we had a blow off top above it, broke through it here, all the way up to here, and now we're coming back down. And I feel that we're gonna basically get below this line at some point, however long that takes, because all of this pump is all unnatural, fake, made up, unsustainable. It's way too steep of a growth curve. And it really does for health of everything to get back underneath this line. How quick that happens remains to be seen. Usually those kinds of falls happen fairly quick, and we could get down here in the next days or weeks rather than months down the road. So if you recognize how much crypto has dropped during this time frame, crypto really peaked out here at the beginning of November. We had this pump here in October, just like in the crypto market, and then it kind of capped out and started to fall back down, and Bitcoin and all the other coins in the market dropped here and dumped again. We had a little Christmas week here pump, just like we did in crypto world, the Christmas time pump, and then it rolled back over again, and here we are dropping. Then you see this other little pump here. That happened in the crypto world as well. After we dropped all the way down here at the end of January, we had this little pump in crypto and in S&P and all the other markets, and we're rolling over again. So you have to pay attention to that, and you have to look at the measured move if this is accurate, which it is more times than not. If we were here in the crypto market at the end of January, we still have several more percent to drop. Currently 9.67, but if you were to take from that exact point where it dropped there, it looks like another 7%. You have to realize how many dollars that might be in the other coins. So pay attention to those numbers, watch the S&P, most specifically the NASDAQ tracks a little bit closer to the coin market, crypto market, but S&P, they're all very similar in indicators, and you have to just translate what these percentages mean in the other markets. So if you had a 50% dropping in Bitcoin from here to here, at 12%, the 7% would be half again that. So if we're at the $40,000 range today in Bitcoin, you could be getting down to 20K, something like that. You have to just kind of work it out and watch out for the S&P on when it might turn around, and you could expect the crypto market to maybe turn around as well. And that is the major overview on S&P and where we stand, and we are definitely in correction territory. And if we get down to this bottom point here, we're going to be speaking in terms of a major market crash. So hopefully that doesn't happen, but it may need to. Y'all have a great day.